Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Okay, good evening. Thanks, guys, for joining. It is Wednesday, January 18. I can't believe it. It's already January 18. This 2023 is already flying. We're almost through the first month. We've got big news in the market coming up, guys. Interest rate talk. They're already hinting that maybe they were going to ease it, and now they're talking maybe another increase, guys. If we see that, we're going to see more market sell-off. Today was a big day in the market. And I just want to go over, before we get the webinar started, 3:30, okay, power hour. Most of you guys trade this session. This was a perfect setup, guys. It doesn't get any more textbook than this. Right here, okay, you see the first bounce around 1 o'clock. We came down and we bounced. It was kind of like a double bottom, but we never broke above here. So at these wicks, you should have like the supply above there, and it didn't break above, so no buy above there. And then it started to push right back down. And then you guys know 3:30, a new 30-minute candle, a new volatility, what we teach you here. Keep in mind what could happen. And see the break in structure right there? It broke, retested, sell. Where did I get this big red box from? Here, 33,300, this psychological level. Look to the left of the chart right here. See this tip? How many of you guys got this? Looking to the left of the chart, you see when it came down and had a couple tweezer wicks right here, what we're going to talk about, and it bounced right back up. So this area, and also if you look too, when it came up here, it came all the way up here, this big wick, and got rejected. So this zone, all I did today was I looked over here to the left, I put it right here, and I extended it all the way to the right. And same with this area. The next one, what I was looking for was over here where it came, rejected there, through this area. You got some consolidation here, and it came right down into there where and then see when I extended that red one, that zone across. So when it came down here, I was looking maybe there was going to be a pullback and it was going to come back up, but it opened, ignited, and continued to break down. And that's an end of the day sell-off. A lot of traders trade power hour for this specific reason. Today was a completely bearish day, and then they really just maximized the move at the end of the day. And when it came into this green box over here, that's when kind of it started to just end of the day, just came in here and consolidate. And now the market is opening up. So you can use these same zones going forward. You can use the same supply if you're going to continue to trade. That's another supply zone. You can bring that forward. And this one too, there's your next zone. So you just bring these across. And then we got to find some more zones below us in case we continue to drop. But this move right here from this to about there was about 75 pips. And then all the way to the bottom was about 150 pips. So when I say, guys, just look for maybe 30, 50 pips, hit a daily goal, you see if you were very patient at the end of the day and you see how it came up for a double top, a double bottom, it didn't break out of there. They rejected it. Then over here, 3 o'clock, they bring it up, they pin it down, and then it consolidates here, still making these lower highs. And then there was the big break in the flush. So, and that happened right exactly that candle right there, 3:30 p.m. Eastern, the new half-hour volatility coming into the market. So guys, this isn't part of the webinar, but did anybody catch this sell? Did you guys have these zones marked up in this type of area here? Sonia, wow, Microsoft to cut at least 11,000 jobs. So it all starts with tech. Okay, if we're going in, well, we've already technically been in a recession, but when a real recession hits your neighbor, when they're getting laid off, it's real life situation. So normally a recession starts with big tech laying off. So if we see Microsoft, if we start to see Amazon and companies like that, if they start laying off, then it's going to trickle down, and then you're going to start to see local factories, supply chains and things like that. So that's how it all starts. It all starts with the upper and then trickles down to lower manufacturing. So guys, it could, in the next 6 to 12 months, it could get very ugly. They don't want to tell you that, like in media and things like that. They want to make it look like we're living in a wonderland and everything is beautiful. It's not. And I'm here in Canada and I'm seeing it over here. And other people around the world, they might have it worse. So guys, just for the next 6 months, 12 months, buckle up, save your money, pay off all your debts as much as you can. Get through this time, because then when the economy recovers, you'll be well positioned where you paid off your debts. Interest rates will come down, then you're in position to maybe take advantage of the housing market. If some of you guys are looking to get into rental properties or buy your first home and things like that. So there's going to be a lot of opportunities for everybody here. So just keep that in mind, stay positive, and there could be opportunities for everybody here. Okay, and so let's get started. Tweezer tops, okay? How many of you guys have heard the term tweezer tops as a candlestick? Have you guys heard of that? And I'm not talking about tweezers that you pluck your eyebrows with and things like that. The name, I don't decide the names of these things. It's always been around. They've been called tweezer tops or tweezer bottoms. Okay, a lot of people know what the name is and they recognize them, but they don't actually know more what goes into it. I've always said, who cares what the names are, but understand what's going on with the candlestick and the liquidity. And today's webinar is specifically going to talk about the wicks, because and this is where I've been reading up a long time about tweezer tops and bottoms. They also have like a tweezer bottom can be like a continuation of a red and bullish candle. That's true, but it's more specifically designed like a tweezer. If you know what tweezers are, if you ever tweezed your eyebrows or things like that, they're equal points. Like I showed a picture in the Discord. So those are kind of signifying wicks, and they're equal. You're not going to buy tweezers and one is longer than the other. They're completely equal. So that's how you got to think of what are tweezer tops with wicks. And specifically what it is all about is extending trends. Okay, when we have a higher high in the market, we have a candle that pushed above the previous wicks high, and we're moving to a new range. So, but if it comes up where it's equal, then psychologically we have not pushed a new higher high. So this affects the depth of market. This is where it gets more intricate, where you got to understand back end what's going on with the liquidity and the orders coming into the market, because a lot of the platforms today, they're run by algorithms. They're run by HFT and bots and things like that. So these things are designed to pick up and read situations like this because it will change up the order flow. So if we have a situation where it's a higher high, that's going to completely change all the bids below us and the offers above us. If we have a situation where we have candles come up and they're equal highs, that also is going to change the order flow. Then that will drastically change the movement of the liquidity in the market, and it will change the order flow in the book. So do you guys understand what I mean by that? Okay, I'm going to try and take it slow, but more back end stuff has to do with the depth of market when we start to explain candlesticks and things like that. But are you guys, who wants to find, okay, go on US 30 if you guys are on your charts, who wants to point out where they see anywhere a tweezer top or a tweezer bottom? Can anyone tell me a time out of any of these candlesticks? Who wants to tell me where they spot a tweezer top or a tweezer bottom? And then I'll look for one. It's sometimes situations like this when we're looking for one, we're not going to find it. In a live situation, you're going to start to see these happen more often than not, always. But right now, when we're kind of back testing, it's kind of like we're searching to find these. But when you're trading live, you're going to spot these after this webinar. And Keith, you got 1300. Let's take a look. Okay, 1300 right over here. Let's see right here. Okay, yeah, similar, okay, very similar, okay, but this candle here okay, here's 1300, then we push down, new lower low, and then that one broke, new lower low. So if I was going to place a line, technically, we don't have tweezer bottoms because there is, like, even if it's 1 pip, guys, even 1 pip, that can change the flow of the markets. Anybody else? That's a good one. But I want a technical, exactly what a tweezer top and bottom is. Anybody else? Noon. Let's see, noon. Okay, like right over here. Noon inside here. I want to try and find one more visually clear for you guys, and then you guys will understand exactly what I'm talking about. Like right now, when we're trying to see them, it's difficult, but I guarantee you, watch when we trade London, watch when we trade New York. I explain these to you guys live always when we, here's a situation, okay, right here. Okay, you see this uptrend coming up right here. It's making these higher highs, pull back, higher low, continue to move, new wick, break above, higher high, pull back, higher low. And then we get some these are tweezers, okay? And what tweezers can do is they're hinting that the market may be time for reversing, okay? So if I normally place a line at this red wick right here, okay, so what happened was it came up right here, 33,895, and got rejected. The next candle came up, but it didn't penetrate above this wick. So it's equal high. So that's technically what are called tweezer tops. That's what it is, equal highs. And then it got pushed down. And there was still some volume that broke out of here and broke for a new high, but then we have another tweezer top situation up here. So it's starting to maybe start to exhaust the volume. There's more offers coming in the market because they're starting to hold a lot of this buying volume. This was maybe the last breakout candle, and then it came right up to here. And the next candle opened and it came up again. You know, when we're looking for, I always say, guys, let's watch to see if we're going to break and pierce for a new high. It came exactly right up to the same area, 33,910. And then a pullback starts to happen. So a lot of situations like this, when we spot tweezer tops or bottoms, it's indicating that maybe there's going to be a reversal in trend for the foreseeable future. So we'll find very similar here, okay? Very similar. So you know when we locate the bottom of the wicks on this situation right here, big red candle came down and bounced, and that's where it closed. Next candle opened and we came down. With all of this red volume and the next push, we should have seen a break of the low and continue to drop down, at least a new lower low. But this now, when they kind of stop it right here, this is not on purpose. Okay, this is done by the order book. This is done by order flow. This is done by market makers. That it's kind of like they shut the door right there. They put in more like bids holding this area so that they can start to reverse. And you see that we have no new lower low in the market. So that's kind of with a no, when we don't have a new lower low, we can't extend a trend coming down. A trend is, for downtrend, we have to have lower lows, lower highs, a new lower low, a new lower high, a new lower low, a new lower high. And then the opposite for uptrends. We got to have higher highs, higher lows. Here we have to have a new higher high, which we have breaking above here, and a new higher low, and then continue to go. And then once we start to find equal highs somewhere, then it should start to tell us that maybe the market is possibly going to start to reverse because we don't have any new higher high momentum in the market. Okay, so guys, does that help visually where you see it come down and you locate the wicks? Because normally what we're looking for is, and this is also going to be in part 2 of this webinar, impulse trades. When we get caught on impulse, this will, I promise you, this will maybe help you guys with impulse trading, okay? Because you're going to be more patient and disciplined, and you're going to wait for a break. If you see something like this, then maybe tell yourself, I'm going to hold off, because Ron said on this webinar, maybe be more patient and wait for a break, or these equal highs will tell you information, okay? I think every night when I go to sleep, what type of sauce can I give the sniper team to help them with their trading? I'm losing sleep at night thinking of different type of webinars. I think of stuff when we're trading live, what could really help you guys. And I just thought a couple days ago, I was talking about this in a live, and somebody asked me, Ron, why are you so concentrated on the wicks at the equal highs and lows? Because they heard me saying that a lot. And I didn't even think about that. And I'm like, that's why I asked you guys, do you guys know about what tweezer tops and bottoms are? A lot of traders just know like what they are. Like if I go to Google right now and we search right now, tweezer tops, like we'll look right here. And I'm sure a lot of you guys have seen these. No, not these ones. These are what we use for eyebrows and things like that. We want to find this one right here. Okay, so you see like tweezer bottoms. See what I was saying? It came down. I would draw a line, okay, at the low, and then the next candle opens red, comes back down, but at the equal low. Oh no, I don't want her. Sorry. I just just one moment, guys. Yeah, we don't want the guys. If you need to do your eyebrows and things like that, those are other tweezers. Those are on Amazon. Right now, we're going to concentrate on candles. Okay. So you see here where it came down. Okay. So normally, let's draw a line right there. Let's put a horizontal ray so we know where our low is. And if we're continuing to go down bearish, this coming down should have broken the low and created a new low in the market, because this will change the algorithms. Then just a little tweak, a little move like that, you'll see the order flow change. If you watch depth of market, you'll start to see a rush order of offers come in the market, because there could be short sellers now going down with the momentum and putting offers above us. If it holds right here, then the algorithm might flip and then put more bids in the market, because now it wants to reverse the move. So these are clues, guys. Anytime we can get a clue in the market, we got to use it to our advantage. Okay, so this is just years and years of trading price action. I picked up on these clues every single time I was scalping. I started to get caught on these. Like right here, I initiated a sell, then I got caught in a pullback and I got stopped out. Then when I went to my journal, I started to see these equal candles that were always getting me caught. And then I started to backtest, and I started to look at probabilities, at how many times in the market these things are accurate, and they're pretty good. And then I started to really clean up my trading and get more disciplined when I started to see these things. And I couldn't believe my journaling completely changed. It was like night and day, just with a little fix like this. So this is now tweezer bottoms. Okay, so guys, I'm gonna go a little slower. I want to make sure that you guys all understand this before I start talking depth of market and impulse trading and things like that. Because I know everybody on here is at different levels. I know some of you guys, today is your first day ever trading, and some of you guys have been trading for 30 years. So I don't know everyone's levels, but do we all understand like this right here? When it comes down, goes back up. Like right here in a situation like this, if I had a line right at this green wick going across, see this red candle, it pierced through it and it created a new low in the market. So it extended the downtrend. And then it came back because there was bids, closed right here. The next candle opened, ignited, and continued to push below here, and a new lower low in the market. But now we place a new line right here. That's why, guys, you know, when you see me trading, I have so many of those red lines. And then like when I go on YouTube, everyone's like, what is this guy? Oh my God, this guy's chart is very messy. And it's, what is he doing? This is specifically why I have a lot of these red lines on my chart, because I'm following the lows and the highs of each move. Like right here, you see this bullish candle coming up. There's the high. If we place a red a line right across, you see the next candle, it came up equal high. It didn't pierce to create a new high. And when that happened, the downtrend continued. So we had this big bullish candle come up, but the next candle couldn't continue. So why? Like understand now back end what's going on. So if you understand order flow, you want to take your trading to the next level. Depth of market is telling us that the bids came up, but it was shut down. It's kind of like a ceiling. There's more offers, there's more supply than there's demand. So naturally, what happens when there's more supply than demand? A move will continue to come down. And if we break new lows, it will extend a downtrend. Now it's given us a clue that this might be ending because there's no more lower lows. It's equal lows. So we have a tweezer bottom situation here, and then the move reverses. So if you're in a sell, this sometimes tells you, you know, when I say it on the second attempt, guys, you know, when sometimes we don't take out profit and then it goes back up and then it gives us another attempt to scale out and it's an equal low. That's why, guys, I'm taking out profit. And I tell you guys, it gave us another opportunity to get out, and we should have gotten out there because there's no guarantee it's going to continue to go down. And then we might get caught in a pullback. So this also helps you guys with taking profit out of the market by knowing what's going on, not just for entries or continuing trends, but also to take profits. It's very, very helpful to understand both sides of trading, not just entries, but also when you're in a trade, when to take out profit. That's another part of trading. And then here, now we have like this uptrend, okay? We have higher lows off the bottom, higher highs breaking out, and now we come up. Maybe this is a supply zone from the past. Like when we do our top-down analysis, for example, let's say these are 5-minute candles and we're walking into maybe an hourly area of resistance. This is where you're going to start to see a lot of these tweezers when you're scalping. They're going to be located at higher time frame resistance areas, at 15 minutes, at 30 minutes, at hourly, at 4-hour resistance points. And then this is where there's a shift in the algorithms, and then they're going to move the market down. So in this situation, we broke out here. That was our high. We could locate it with a line right across, and then we watch our next candle. Next candle opened and continued to push up, but no new pierce of a higher high. Even if it's 1 pipette, okay? Remember, we're trading against algorithms. We're trading against bots. It's very technical, right down to the digit. Like it's all set up, guys. Like, but we're not trading against humans anymore, like back in the day when we used to. Now we're trading against bots. So I tell you guys, you gotta be a robot when you're trading. You have to, because that's who you're competing against. So we have to understand how to trade against bots. And it's when you start to locate this, there should be bells and alerts going off. Clues. Not always. Okay, remember, this is not always a situation, but this may help you get more consistent and increase your trading and decrease your losses and things like that. Because now when it came up, like if I was looking to continue to buy this uptrend, I'm getting ready. I see a green body candle come up, but it's not breaking here. Then maybe I'm holding off where I wanted to take a buy. I see it's an equal high and get rejected. Now it's like a shooting star candle coming down, and now the trend starts to reverse. So this can also save you from impulse trades as well. So what happens if this is at a critical supply area and we see tweezers? Then maybe it's gonna get rejected, and that's where you sell at a supply area as opposed to buying that area. Okay, so let's go back to our trading view over here. Okay, does that help, that illustration of those candles? Okay, and then we'll find like a another situation too. And I'm just looking for like technical tweezer tops and bottoms and things like that. Okay, and they also show like a bullish engulfing candle opening as a tweezer bottom as well. But I want to focus more on this one on wicks. Does the body length matter? The body length, if it's thin volume, okay, if the volume is starting to get thinner and we're at a specific supply demand area, then we know that maybe, and then we get the tweezer bottoms at a demand area and the selling volume is decreasing, smaller body, then we can probably with high probability think that we're going to get a reversal and then it's going to continue to go up bullish. So always just continue to focus on it. Here's a situation right here. Okay, so if I was to draw like a red line right at that, this red wick right here where it came up, you know how I always draw like a line. Okay, and sometimes what I do too is when I find where the highs are and where the bodies are, then I grab my box and I kind of box this in as a complete supply area like that. That's what I normally do. But you see when we came up, got rejected. We came up again, bullish, equal high. Okay, we're not breaking out on this is, so then this is also for pullback trading. This will also help you. And if you're using Fibonacci's and things like that, if you start to see tweezer tops at like a 0.5 retracement at 618 at a 382, this should give you a clue that maybe the move is going to continue going down. So in situations like this, yes, it's a nice bullish candle. It's a nice bullish candle. This is a very bullish candle, but it's an equal high. There's no new pierce coming out of here to create this because we have this huge supply candle. So you can see that they're shutting it down right there. They're not allowing the market to go any higher. So that could be done. This is all done strategically. This is not just by chance how it does this. This is all done. There's already order flow when we're trading before we even get, like right now, there's order flow in the market 5 minutes from now, 10 minutes from now, 30 minutes from now. It's resting pending orders in the market. So they have everything strategically set up where they want to short it, where they want to pump it. They do this a lot when there's red folders, when there's news, when there's a catalyst in the market and things like that. It's all, what I'm trying to say, guys, is this is all pre-planned. Okay. For some traders that don't believe that, I've been doing this for a while, and this is all strategically set up, guys. Okay. But us as retail traders, we need to have the edge as much as we can. So at SST, we share all the knowledge that we know, like myself, Dave, PK, anything that we can give you guys, we're more than happy to give it. Like, I just want to see you guys improve your trading, anything that can help you guys. I see drastic improvements coming from a lot of the webinars we've been doing. And I think this one maybe will really click in for a lot of traders in here, helping with impulse trades. So if you have that urge to take that buy, you know, when it's a big green candle and it's exciting and it's getting up here and we want to take it, sometimes just hold off until you see the candle pierce out. Okay. You know, sometimes all you want to see is it just pierce out. That could be where you buy, because now at least you know that they broke it out of there and the algorithm could be shifting where we have a new higher high, and then it could get rejected, but then there could be bids coming in the market just because of that little spike coming out of there could change the whole depth of market below us. And then if bids come in, then they'll fill up with volume and then we'll continue with that move. But this is a clue right here telling you that they're shutting it down. And then what happens is we start to break down. Then once you break down below this previous low right there, then naturally what's going to happen is we're breaking a new low. It pulled back, trapped all these buyers right here. Now the volume is moving away from them and then they continue to push it down. So that's a situation there, right there of tweezer tops. And guys, now when you have this, I guarantee you tomorrow when you're trading, it will click in. Okay. I'm telling you guys, like right here, look at this situation. We've got a market, big bearish engulfing candle pushing down. It comes up, retest, lower high, lower low, close, continue, push up, lower high, big flush down, coming down, open. We come back 50% of this candle. It gets rejected. We push down, and that's where we'll place a line. Okay. You know, like that's why I have so many lines on my chart. Here's like another situation right there. Now we're starting to see them. So you see right here where it came down, back up. So the next candle, they brought it down. Look at what happened. Do we see it break this low? No. So it starts to hold. So this is where now I place my green box, because now I know that they could be holding the market right there. Bring this box across, bring it all the way across till next week if you have to. It's now you've identified a short-term zone in the market that could turn into a long-term static area. Guys, do you guys follow what I'm saying? Do you guys understand? I know I talk fast. I had a coffee, but slow me down. That's how I work with you guys. Slow me down, because I have a lot of things I want to spit out all at once, but I want to make sure everyone is on the same page. I don't want to leave anybody behind, and don't feel shy. Okay, we're all learning together. Okay, you guys, Sherry, you're all good. Trevor, all good. Barney, keep going. Twanda, yes. Miss Pre, okay, guys. Juan, all good. My man. Okay, if anything, guys, you're not clear about, say, Ron, hold up, go back, run it back one more time. Okay, I want you guys to all get this, because I told you guys 2023 is going to be a big year trading for you guys. We're not fooling around this year. We're going to make sure you guys understand everything. Okay, so you see, guys, and you got to, you got to do this quickly. Like, you got to understand, and with 1 minute really teaches you these concepts. That's why I love the 1 minute scalp workshops that we're doing, because you'll learn so much about price action on 1 minute. Then you can slow it down on 5 minutes. You can slow it down even further on 15 minutes and watch what's going on. And you see now, okay, so we have that equal low. It pushed down, it tried, but think now. Think psychologically. Don't just think of candlesticks. Think behind the scenes. Think if you were a market maker, what is happening right now in the market? So we came down on a downtrend, and they stopped it right there. That's where it reversed right there. The next candle comes down again, red, and they hold it there at that equal low. That's done on purpose. Okay, we could say that that's just and it happened at that time, that situation. We can, but when we're starting to see this over and over and over, scalpers are seeing this. We're seeing that this is not just by chance. This is done all day, every day. Doesn't matter what security you're trading. This is price action. That's why I love price action. This is something that RSI is not going to tell you. This is something that MACD is not going to tell you. This is something that stochastics will not tell you. Bollinger Bands are not going to tell you this type of situation. EMA will not tell you this, but price action is forward moving. It's a leading indicator. You can start to predict the move. And then now, if you start to have some confluence now, like if you have bullish divergence forming, or you have an increase in strength, which we have, it can start to maybe tell you something. If we're coming down maybe to like a 200 EMA and we're starting to hold, maybe you understand why the algos are holding this area right here. Okay, it all works hand in hand. And then you see a couple more times we come down, but now this wick it's higher. Look at there. Okay, I know it's just by a couple pips, but how many of you guys really zoom in when you're trading? I love zoom. Like sometimes, guys, when I'm trading by myself, I'm looking at candles like this. That's why I follow one security, one time frame, one chart, and I'm just following what's going on here. So you see here, the equal lows, those are tweezer bottoms, okay, right there. They did not break this area to the pipette. They held it right there. 33,859.10, right there. They held the market. So now it's coming back up. We try again where they bring it down, but this is now a higher low. So it's now, think about what's going on depth of market. Bids are increasing, and down below here, bids are stacking. They want to protect this area. They don't want it to break. They're holding it. So again, we come back down one more big time here. It's kind of, look, a tweezer bottom right here as well. See this low? It's identical to this low. This is, guys, where I take my trading to the next level. A lot of I've been working with a lot of professional price action traders over my years, and they believe that this is the only tweezer technical bottom. It has to be a side-by-side candle. Like one candle come down, the next one. It's not the case. You'll start to see, like, that's why I always put red lines on my chart. This is another situation where you get a tweezer bottom, but it's at another time. So this candle came down right here and got rejected. This candle, 15 minutes later, came down exactly equal low. So this is a tweezer bottom, another one. So they're holding the market. They're holding it, guys. They're building. So it's building, okay? And now we continue to come down. Like this was another low. I would have a line right here. And you see this candle, it got scary here. This big red candle came down. We should have seen maybe an equal low right here or a higher low, but they flushed it out and it came down. But look at where it came. If you brought this box across, it's still holding right above. And it's like a 1 pipette, 2 pips above. This is all psychological, guys. This is how the algorithms work. And it came down, back up. And then now we start to close, and like we could be building positions down here. And then we start to get the break for the new higher high above here. When you start to break this area, that's our neckline. Like right here, we see where the previous highs are. And once we're building all of that volume from the bottom, now we start to build higher lows, and then there's the breakout. And then we continue to move up. And we might move up again to where is the next tweezer tops, okay? Like right there. This is not 100% perfect, but very, very close. Where it came up there, rejected, next one came up, no new higher high pushing the market. So naturally what happens? The market retraces right back down. But if you watch here, it comes down. This level is still higher than all of this. So we start to build out of this area and it pushes back up where we break the high. It continues. And that's where they cap it. And then we start to move down. But do you see how these can help change your trading, the way how you're looking at it? I guarantee you now, I know it might be a lot to take in right now, but maybe watch this webinar another during the weekend and apply it tomorrow to your trading. And I guarantee you, you are going to make some better trades tomorrow, right? I can tell you that. Like right here, guys, look at this. This is where you can find bottoms. This is where you can find tops. Okay. This red candle that came down, that's a low. Draw a line. Okay. Very simple, guys. And now we start to see, okay, we come down. They're like equal lows or a little higher. So they're holding. Then it bounces, comes up. We come back down. Look at the equal lows. Again, right? It kisses that red line and goes back up. Kisses that red line, goes back up. So what I like to do in situations like this, when I start to see 1 or 2 candles, already I'm drawing my green box. Bring it across till next week if you have to. Okay, it's now you've identified your first static zone in the market. This is one job that some traders cannot do, and now you can do it. So anytime we come down here, if we find tweezer equal lows, maybe we should be buying that move. Come back down instead of breaking. Like to sell, you know, normally when we have the box, we're looking for a sell below there. I tell you guys, maybe let's look to if it closes, but that's why I tell you, let's look for a close below. Otherwise, we're taking an impulse candle. So what we need to see is an impulse to create that new lower low, because we have equal lows. So at least we can, with a new lower low, we can shift the algorithm, and then maybe we're going to get more offers above us coming in. The bids might get pulled now out of the book because they're scared now that we're going to have a downtrend. And then when we get that new lower low, the break, even if it's an impulse, what do we look for? We look for the retest to come back to this equal area where we had the equal lows. Now we want to see the supply come in the market and prove to us that this is going to be a real move coming down. If we get the rejection, then when we break the new low, that's where we take the sell and we come down. So this will really, really help. And also like over here, yes, it did break out. There was some volume above there, but once this candle started to close and then we flushed down, 10:30 a.m. Eastern, 30-minute candle, new 30-minute candle. They work this area a little bit, but then they flush it down. So we could be like, you can give me any security and we can go through it and we can start to look for equal low right here. Here's another one. Okay. See where the market came down bearish. As soon as you track one low, okay, right there, look at your next candle. It came down red, didn't break, didn't push down, and now equal low. What do? They reverse the move. And it's you're going to start to see this. And then also with your top-down analysis. So when you do your top-down and you are at like an hourly support area or a daily demand area and you start to find tweezer bottoms, then you can have a high probability that they're holding that area, and then you should be buying it instead of selling it. Same situation, opposite. If we're moving to a higher time frame supply area and we start to see tweezer tops equal highs, we might now have a high probability that we're going to continue going down. Okay, This Tweezer Tops and Bottoms will help you guys with impulse entries. Maybe you're gonna hold off now. Sometimes I'm doing that too. I'm waiting, and I'm telling you guys, if it breaks, I'm gonna buy that candle because I'm waiting to break that equal high and maybe change the algorithm and maybe catch a move. But if it's not breaking, this is where I stay disciplined. Sometimes I'll get caught, but sometimes, you know what we do when we want to speculate breaking? A feeler trade. Okay, use a feeler trade. Like in situations like this, where it came up green candle, wick. If we locate the wick right there, and it came up, and then the next candle was green. Let's say if we're looking and we want to take that break and we're not too sure, maybe a small feeler, because then if it gets rejected, we can easily close that and we don't get caught. But situations like this too, we do get a higher high break, but you got to look to the left of the chart. You got to also look, not just to follow one or two candles, follow the entire structure. So that area, before we got up there, you should have had identified that this area is supply, and had it going across. That's why I love putting these zones, because it really teaches me discipline. And then what I do is I look for equal candles coming in here. There are some equal candles not creating a new higher high. So naturally, supply will push us down. A situation like this, where it comes up, doesn't need to necessarily tap the red area. It could be a lower high, and then they push it down. And then this is where I also do too. If I had a red line exactly at that wick, you know, look over here. An hour later, it hits the same area. It's an equal high technically, so the market moves down. Some price action traders say it can only be side-by-side candles. Okay, I used to believe that myself when I was learning it, that because I was reading what Google was saying. But when I was exposed to candlesticks, I was scalping 1 minute candles 24 hours a day. I started to see this. It's not always just it's side-by-side candles. It could be at another time, because the market is coming up an hour later trying to break this high, and it's an equal high. Technically, that is an equal high. It doesn't need to be the next immediate candle. It can be an hour from now. It can be 2 hours from now. But it's still an equal high. So there's no new higher high in the market. Therefore, it's not going to change the algorithm. This wick will change the algorithm a little bit. See how it broke? It broke a new high. So that at that particular time in the market, it created a new high. It got rejected hard. But what it did is it told the algorithms that we broke a high. So in the future, that is a higher high from this area. So if it comes down, picks up liquidity, we could be expecting a future breakout of this area. So we could drag this box across tomorrow, next week, next year if we have to. We may revisit it. The market said we broke out of here. We may come up to claim a new high up here at some point, okay? But over here, we never broke. We never broke. All equal, then it started to push down. You're going to start to locate these guys, I'm telling you now. After this, because I was doing it live, and it's someone in the group, I can't remember who said, Ron, why do you look at equal highs? And that's why, guys, I tell you, ask me questions in lives, because then it gives me an idea of the next webinar to help you guys. That's why I love when you guys ask me questions during lives. Then I can really explain it, because I can't really take too much time in a live because we're trading. But right now I can spend 90 minutes with you breaking this down fully. So start to look for equal highs and lows. And then when you start to see it forming, then maybe draw that green box, 1 standard deviation above, 1 standard deviation above, below, and take it with you across and watch for future reference if it breaks that area. Isn't that a double top? Yeah, exactly, Barney. It's a double top, you know, but equal high double top. So same with when we have an M pattern. If it's coming up like this, we locate the first rejection. So what we have is we draw a line right there. And then at another time in the market, if it comes back up, okay, you know, if it breaks out of here, okay, that's a higher high. But if it comes to the equal area, that's exactly what it is. It's a double top. But some traders don't look at this. They just look for the bigger pattern M. But if you're scalping, you could find 2 candles that are equal highs, and that's a double top. Individual candlestick trading. You know, in one individual candle, okay, you know, when I'm trading a 5-minute candle, sometimes I'm scalping the volume in one 5-minute candle. I'm taking 3 trades in it. It comes up, okay, a big bullish candle, I'm in a buy, it comes up. I locate the high of the candle, okay? Maybe in the first minute, I get up there, I take out 10, 15 pips out of the market. Now it gets rejected, comes back here, and then it goes back up. I take another buy, and it could come right up again. I'm looking for it to break out to get a few more pips, but if it's coming like to an equal high, I'm watching it. Then it gets rejected. Then I know I got to take my profit out because that's a double top, equal high rejection within the same candle bar. And then it comes down. So it's telling us that the volume might come up for a third time and try. If it gets rejected a third time, I can probably say with high probability, the next candle is going to open bearish and come down because it's coming off of those equal high rejections. And then the next candle might come down with offers and come down bearish engulfing. That's how these things are created. So I'm glad you pointed that out, Barney. That's exactly what that is, like that. But if it breaks, that's a different story. Now we have a higher high in the market, so it's not equal anymore. So this now shows us it pushed through. We have a new higher high. So then below us, this is going to change the depth of market. Now the algorithm might start putting more bids in the market, picking up more pending buys because it wants to extend this uptrend going forward. Okay. Guys, is there any questions? Are you guys, I'll go back in the chat. Are we all following right now? Twanda, your eyes are getting older. I have laser, I did LASIK surgery 10 years ago. So that's maybe why I have good eyesight and I can see these things. I used to wear contacts and I hated it. Guys, the best investment I ever did in my life was LASIK surgery. If you guys wear glasses or contacts, you guys probably know what I'm talking about. That's a good investment. Okay, guys. So, and in situations like this too, you can look here, look how many equal highs there is up here. Like the market is telling us something. Okay. Remember, the market is all about clues. It's who can pick up clues does better in the markets. Who is sleeping on the clues is gonna maybe not take get into a move or understand what's going on. So that's why, guys, like when I trade, I'm following everything. That's why I like to really focus in on the candlesticks. Like you'll probably see me zooming in at situations like this. That's why I love trading in the workshop because I can really break things down. So if we start to look at this area, like we see it came up right there, rejected. Next candle, it made a lower low. Okay, so we have a new lower low. So what I would do is I would draw a red line right there. Now we see the consolidation. Now it's accumulating. At some point, okay, if we have equal highs and equal lows, it's going to now consolidate in here. And we know that at some situation, the algo is going to break out the volume out of here. We're not going to stay trading inside this situation all day today. So you can bring this consolidation box across with you. That's where the auction is taking place right now. Okay. So trading is an auction, guys. Just like if you go to your local car auction or wherever you go, it's an auction. There's bids and there's ask in the market, and we're trading the liquidity. So inside here, equal high, it comes back up. Then we have a low, equal low, comes back up. No breakouts, no breakouts. This one, a tiny, tiny little pierce to the upside, but they could have just that little pierce. I know it's so small, but just that little pierce. Do you know how much buys probably entered the market that had pending buys right above the wick? I guarantee you guys, there was a ton. I'm talking millions of volume got triggered just by that little break, because a lot of traders, they know they're breakout traders. They'll have their buy stop right above previous wicks, looking to get triggered and take it up. But you think the market makers don't know that trick, that little old school trick? They know that. And what they do is they come up here, they'll trigger all of those pending orders, and they're not taking it up. So what happens is it closes. Look at what they do. They gap it down, ignited red bar, and they flush it out. All of those pending buy orders, that aren't market executing, all got trapped. And look at what they do. You're at a stop loss. You're at a big loss. That's why I don't trade with pending orders. I used to. And then when I started to back test, I started to see this shit over and over and over. I was getting triggered and I wasn't going into profit. I was just followed by a bearish engulfing candle because I had my buy stop right above here, looking for that breakout to get triggered and go up. And I had my stop loss down here, and I was always getting trapped and caught in the market. So I said to myself, I'm not doing that anymore. I'm going to hit my own buy and sell when I feel it's the right time. And then you see we break the low and push down. And then we locate again. Where's the low in the market? Right there. So we're going to follow this going forward. We come back down, back down, back down. Nothing really breaks. So just that little move, just that little wick above there by 1 pip can change the order book and change the flow. And we come right back up and it breaks, guys. So you're going to see tomorrow will be a completely different day trading for you guys. I promise you. And then if we ever come back and we break below here, this is going to be your zone to continue to like sell the market. Like right here, this move coming down, coming down, coming down. Right here goes back up. Next one comes down, equal low, big bullish engulfing candle come up. Then it comes back down red, retraces. We come back again, a third like touchdown here. But then when it starts to break, there's your impulse break. So if you're not trading this candle and you're taking that impulse break, then maybe look at your next candle. So you know now, we broke this area. It closed below. So this is your candle, your retest. Assume it's going to be green because when we break an area of support, we go down, there's going to be bids down there. So there could be bids taking it right back up. But if it gets rejected and it breaks, that's where you should be selling. And then you place your stop loss above the equal area up here. And it depends on how much you're willing to risk. Some traders will place it above this candle. Some traders 50% of this candle. Some other traders that leave it more room to breathe are above the entire structure up here. So that's all personal preference. And you can start to see, maybe don't get caught trading pullbacks. You see, now just follow the equal lows and then see if it continues to drop down. And then for buys, you only buy if we have a new higher high and volume close above, because you know that that's step one to continue an uptrend. If we don't have new higher highs, we're not doing an uptrend. We're not going anywhere, okay? We'll possibly continue to come down. So I could go do this entire session with you guys. We can pinpoint. I don't like to do this back testing. I don't like to do this where you see it here. I like doing this live because I like explaining it live, but I have right now, there's no live market really moving right now. So I have to show it like this, but you guys know the way how I do things. I like to do it in workshops and things like that while everything is live in the market, but this isn't very difficult. Okay. So just locate some wicks in the market and you're going to start to see how they react at equal levels. Bitcoin one, yeah, we could look at Bitcoin too, but then you guys will probably start trading Bitcoin and won't be focused on the webinar. Cassio, are wicks stronger than body to use for guidance? Wicks are just a range. Okay, it shows how big of a volume push there was, but I believe that the most important thing is where the volume closes in a candle, because that's where the actual volume is at the end of the candle. So a big bullish candle like this, it's closing near the high of the wick. Where it pierced out of there, it closed near the high. So we have a lot of buying volume up there. So when it comes down red and then it goes back up, we know we're concentrated near the high, so we can continue to go. You mean when you're drawing the lines? Drawing the lines. I look for the wicks first, okay, because you want to find tweezers are the wicks, okay, in my opinion. They're the wicks because you want to find the extreme highs and the extreme lows in the markets. But what I do like this is, if this is what your question is, for example, like this, when I find an equal area right here, a wick and a wick, I do that green box. I kind of, now I look where the most recent bodies are right there, and maybe these bodies, and then I'll encapture that entire zone. So now I've created a zone. I've made my own block now, okay? But if I'm just following the wicks, I see right there. But then if I want to come down to find my entire demand zone, I might come down to find this bearish candle and then the bullish engulfing candle. And then I have everything inside here. I flip this box to green and just extend it across on your chart. Very simple, okay? So now I've figured out where my demand is. Every time we come down here, it's kind of like the pocket, the demand pool. We continue to move up. We have equal lows, so it's suggesting that we're going to continue to move. And as soon as we start to break the resistance, then boom, we scalp it up. And this box, this zone, bring it with you. Look, and then look at how it will react in the future. Okay, so if you brought this box across, look at what happens. We start to get rejected. At some point, we come right back in this static zone. We're going to have a reaction in the market. So look here. The previous low was right here. Now we broke. Okay, broke. It proved the algorithm making a new lower low. Okay, that's good. That's a clue. Yes, we do have it, but it's an impulse. Okay, so you don't have to trade that candle right away. Wait, watch what it's doing. It closes right here. The next candle opens, comes back down, equal low. So naturally what happens is we have a big bullish candle coming right back up, and then it comes back down. Then it breaks. And then here's the candle that actually closes with volume below. And here is your sell opportunity in the market right here. As soon as it comes up, you assume it's coming up green, gets rejected. We have no wick below us. That's where I 100%, I'm taking a sell here, sell, and then it's your decision where you want to place your stop loss with the structure. Some traders, they place their stop loss really tight above the previous high. You know, that's tight because this candle could open and come right back up, and it could be an equal high, and you're tapped out, and then the move goes down. So some traders are above right there. Some traders, 50% of this big candle. Some traders are at the top of the box, the zone, depending how much you want to risk. Now, when the market moves away from us, you right click this and make it a supply, because now the volume is variable. It's the only thing that's moving. This zone is not going to change. I'll take this zone with me, continue to move it. Maybe I'm going to come revisit this later on in the afternoon. But right now it's selling, and then we trap it. We see equal highs, continue, pull back, and then they flush it down. And then this consolidation box turns into like a supply box going forward. Comes over here, we play around, and then they flush it. They break this low and continue to drop. Market continues to drop. Let's look again where we'll start to find some tweezers in the market. We locate this bottom. Okay, so that's one low. If we ever come back down and it's an equal low, should be giving us a clue. But you know, when here I also look at bodies too. I trade bodies as well. The wicks are one piece of the puzzle, but the bodies are another piece of the puzzle. So what I do is, you guys know I draw that green box like right there. So this shows me, this is where all the support is being built right here. This shows me that this was just a flush candle that came down, hit the pending bids down here, triggered all the stop losses, and then they reversed the market. And then now we start to hold in here, it comes back, double bottom, and then we start to break out of here. So guys, you're going to start to see this, believe me. I know it might be a lot on this webinar, but if you really concentrate on one or two securities and you really watch price action, take a day off from trading. Like, you know what I mean is, just focus on mastering this for one day. It's not the end of the world. Tomorrow, if you want to do this, or maybe like even in the Asian session, just take a day off where you're not stressed out about trading and worrying about if you're in drawdown, if you're worrying about blowing an account, things like that. Sometimes you just have to take a day to not worry about making or losing money. You just got to learn how to do this without any stress or without any pressure. And I promise you, if you just take one day, 1 hour, and just to practice this could be the change that you need for the rest of this year. I'm telling you, if you guys trust me, I'm looking out for your best interests, everybody. This could really, when I teach a lot of traders, we go over this and they're like, holy shit, Ron, why didn't you tell me this earlier? And I never thought of that. I always assumed traders knew about this, you know, so I don't know what everybody knows or doesn't know. So that's why I love feedback, guys. When I'm explaining something, if there's something you don't know, stop me, because I guarantee you there's someone else in the group that doesn't know what's going on. And we've got to learn together, guys, so we know what's happening. Okay, are you guys comfortable with what tweezer tops, tweezer bottoms are? And if we look at Google too, okay, I don't want to like say that Google's wrong, but they also have this too. Situation. Let me show you where it's got bullish and bearish candles, because like right here. Okay, so they call situation like this. Okay, right here. So you see this big bullish candle come up and it closes, and then the next day opens equal high. So this is what's called also a tweezer top. Okay, but this is now locating bodies. I call this like a bearish engulfing, but it's still equal, and then we flush down. So this is technically a tweezer top with no wicks, okay, bodies. And then we can also have tweezer bottom here, where it comes to a support area, we close, the next candle opens bullish, and then it comes up. I call these ignited candles, ignited. Some traders understand more of the word ignited, but these are also technically tweezer tops and bottoms. bottoms. It can be bodies, exactly like wicks too, formed at areas. But I like wicks because it shows a clear rejection. You can visually see a rejection off the wicks. Like I like to see something like this, where it comes down, maybe we identify this area as support, and it comes down equally, coming up, comes down equally, coming up, and it closes. And then all we need is a new candle. We assume it's red coming down, pick up a higher low. And when we're breaking out of here, this could be the start of a reversal, okay? So when guys are asking me, Ron, where do you use feeler trades? Situations like this, maybe take some feelers. And then when you get the momentum of the market, then there's no more feeling the market. You know exactly what it's going to do. Start to trade with your regular lot size. You know, this is why we use feeler trades. It's to test this out, to see how it's holding. If it starts holding, then we gotta go in with our regular trading size, guys, okay? But any questions, guys? What time we got? 7 o'clock. Okay, I got about 15, 20 more minutes, then I got to go get my daughter at the birthday party. But do you guys have any questions about this? And also was for impulse trading, okay? For impulse trades. So if you locate an area where you have like an equal high, then understand that area, that if we don't create any new higher highs, we're not moving anywhere. So don't take an impulse trade if you're watching the candle come up, and wait for it to prove to you that it's going to break out. A little split second like that. You know, sometimes when I'm on live with you guys, I say, guys, I'm about to buy because it's right at that equal high. And then all of a sudden, when I go to my phone and I'm getting ready to go to US 30, put in my lot size, I see it get rejected. And I'm like, guys, I am holding off. I'm holding off. And that's why when I'm saying that, you guys understand what I'm saying. It's coming up. I'm watching to see that equal high break and that flood of volume. But sometimes it happens so fast and I'm getting ready to take that buy, and then I see it get rejected at that equal high, and I'm saying, guys, I'm not taking the trade. Hold up. That's what I'm reacting to. It's situations like that in a live environment, what I'm looking at. So there was some traders that asked me, Ron, why do you like split second change your mind? That's what I look at. Sometimes that little split second, and you see that rejection at that equal, will change the perspective of what you're looking at. So I know I've been looking at these for a few years, and some of you guys are really new, but I guarantee you all you need is this webinar, and you need 1 or 2 hours looking at the markets tomorrow, and this will click in. Just like that other webinar we did, 50%, okay? Just eyeballing this big green candle. This was yesterday, 940. Remember the Bank of Japan, the Japanese news in the market? This is what caused that big spike in the market on all securities. If you're just, after that webinar, what we did, if you're just looking, eyeballing 50% of that candle, it's right there. This clicked in the next day with a lot of traders and completely changed the way how they were trading the next couple of weeks. So what I do is locate 50%. You don't even have to use a fib, and 1 standard deviation above and below, and just draw now your box. So if we stay above here, we might push back up. But now use equal, look for tweezers and things like that in the market, and continue to push down. When we push right here, see these candles, okay? We broke this area. This candle came down, measure the lows. Like, that's why I have a lot of these silly red lines on my chart. That's why everyone makes fun of me when I go on YouTube. They're like, why does this guy have so many red lines? But now you know why I have these red lines. These save me from making mistakes in the market. So I know I want to take that sell there, but then it comes back up. This candle comes down bearish, but I'm always watching to see if it's going to break here, because otherwise you're hoping, if you get in, you're hoping that it's going to break there. So what we need is even just a little push. That gives me enough momentum to take the sell with a little bit more confidence than a candle closing below. At least I know that it's penetrated and broke below. Then I know that maybe the algorithms are going to change. But in this situation, it comes down, doesn't really break this, and then it reverses right back up. So do your best to locate these. Just try, okay, tomorrow, and see. Maybe this might change the game for you. And also, not just like on individual candles, okay, at zones. If you start to see these created as zones, it makes things even better. So if you locate where your zone is, you bring this all the way across. That's like a visual supply zone. You can see that when we came up there, big rejection. So number one, you should locate this zone. So then we have equal highs coming up there, and then it flushes back down, but follow the lows too. We're picking up. So we're consolidating in this area. And yes, it did break out here. Okay. So that was a break and a move up. But when we're looking at a retest, this is why, okay? Situations like this. So we had the first candle close above. we're looking for the retest. So mark the high of the first candle that broke out right there. Now, when it opens, you look, this candle opened and it went up green, but look at, watch for it to break this wick. It never did. And if you just hold off for like 10 seconds, 20 seconds, instead of hitting the buy button, you see it get rejected there and a big red candle push down. A lot of traders, as soon as it opens green, they get excited. They hit the buy button. It comes right up to the previous wick and gets rejected. And guess what? Their stop losses are down here and they get trapped and they get taken out of the market. Okay. So it's not going to be like, change everything. You're going to become consistent right away and profitable. It's just one piece of the puzzle to help you with price action. I'm trying to give you guys all the pieces. Okay. Also over here, you have a situation where we have our first bottom down here. It comes down, locate the wicks. There's the bottoms. I think we looked at this one also, but it's just visually looking at the same thing over and over and over. See how clear this double bottom is? It does not get any more technical than this. And what I like to do too is I like to put a green box one when you ask me about the bodies. So I go up to the body and then right to that red line. And I bring this across right there and I make it green. So I'm right up to the bodies and I got the whole wicks. So to take this down, I need to see a new red candle, at least make a new lower low. We come down here. If it's not breaking equal lows, maybe this is an area where maybe you take a little feeler buy. And then as it continues to move, maybe you take a buy. And then when it starts to come up to areas like here, identified resistance areas, you got to think if you're scalping that move, there's no guarantee that we're going to continue to break out of here. We might come up to equal highs and push down. But if you're scalping zone to zone, you're looking for those smaller pips. Like that candle alone is 20, 22 pips. That move up to there is about 30, 35 pips. You can start off with a little feeler down here. The second leg of a W is the stronger one. So you get your pips, get out, and continue to watch what's happening. So this is maybe going to help you guys out. So is there any questions, guys? If you guys have any questions right now, I got about 5-10 more minutes, guys. On the flush down, would you have taken the sell over here or right here? All in this area? Okay, so the first candle closed below, came down. Now we watch for maybe I would have got caught on this candle too, coming down where it opened and it went down red. So I would locate that. And you see, sometimes they catch you. Sometimes they catch you. They broke it, you sell, but my stop loss sometimes is above the zone. Okay. So with the volume closing below, I just flip the color to red. And sometimes I keep my stop loss above here. So if I'm in a sell, sometimes like that little pierce, we go into a sell. And then what happens is it comes all the way back up and then we come back down and we close. Next candle again, right there where it comes down, it's kind of like an equal low. And then you see it coming up. This gets scary now because now we're thinking it's going to break out of here. And then maybe this candle that comes down, if my stop loss is still up there and I'm in the trade, now it's giving you another opportunity to just maybe get out of this trade, review again, maybe get out of there with minimal, just few pips or break even and just get out and watch what's happening. And then maybe it needs to come back down. But all the time of the day, this too, I'm just looking at candlesticks. So I don't just trade just looking at a candlestick. I watch what time it is. This is 9:30. This is Wall Street open. So this is a whole different situation over here. Okay. So I'm watching Wall Street. Here's 9:35. Now it's trading. We got to watch 9:45, 10 a.m. So the move happened at 10:30. It was later on, but this is Wall Street. So this is a whole different situation than just normal trading candlesticks. So like the range would, like my mindset would be completely different trading this as opposed to just looking at it and just talking about it. So different mindset for different session opens. Rav, you always get caught in these. That's why I asked. Rav, then you know what? This time of the day, this goes for everybody. 9:30 to 10:30, guys. If you don't feel comfortable trading this hour, stay away from this garbage. Look at after how easy it is to trade. It's just, I don't know what the excitement is for everybody from 9:30 to 10:30. I know it's Wall Street open. Everybody loves the fast moves because they want to get in and get out. It's nice, but how many times do we get accounts blown up trading this time? Most of us, okay? So what I would recommend is if you really want to take your trading to the next level this year, and hear me out, guys, okay? I'm not saying this, but I'm looking out for everyone's best interest here. if you're trading the markets and you're willing to put in the time from like 8 a.m. to like 11 a.m., when 9:30 to 10:30 comes, if there's a really nice setup, take it. Otherwise, like if we're getting this type of garbage, maybe hold off. Just watch what they're doing. And this might change your whole outlook of the day and your profitability. This hour, and then look at 10:30, like when post PK starts, sometimes you get some amazing moves at that time of the day because Wall Street's already grabbed their liquidity and now they're ready to move it. Look at today. How many of you guys saw Wall Street today? It was a mess. It was a disaster today. Like this, right over here. Look at this. From 9:30, like what is this? Okay. So again, from 9:30 to 10:30, if you didn't even take a trade from 9:30 to 10:30, right here, right there. Look at after 10:30, what you could have had. You guys could have been, so guys, please, I have everyone's best interests at heart here, okay? Just hear me out. If you don't feel like, check your ego at the door. A lot of traders, they want to trade Wall Street because they want to flex and they want to show that they can trade Wall Street. But most traders get blown up right here. And you don't think the algorithms know that? Guys, I'm not a market maker, but I know how retail traders trade. I am a retail trader myself. I used to get caught and blow up a lot of my money trading this. And then I started to back test and I'm like, why am I not just starting to trade at 10:30? Sleep in. Go from sleep in a little later, go get a coffee, go to Tim Hortons, come start reviewing the market after 10 a.m. Don't even trade the garbage. Even if there's an amazing move, okay, just take it if there's a really, really nice setup. But 10:30 might give you the best move of the day and you're done. And look at it. And then throughout the day, all you see is they were flushing it down. 3:30 was another monster move right there. Do you guys understand that? Maybe sometimes even London, okay, London, you know how we start a little later? We don't even do like the London market open anymore. We start at 3:15, we do our top down and we trade after like 4, 5, 6 a.m. We look for the better move. We let London market do its thing. You can do that too. Also with NFPs, FOMCs, situations like that. You don't need to trade right at the bell. You know, when Powell's speaking, how many of you have blown up accounts in the first couple minutes of those? You don't need, look at the moves 30 minutes later, 1 hour later, after everything settles down. Sometimes it gives you the best moves of the markets, but retail traders are so attracted to trade the high volatility and they fail to realize that 1 hour later could be the best and easiest trading that you can imagine. So I'm guilty of that, Franco, too, you know, but I've been trading Wall Street for a long, long time. But I know a lot of you guys don't have that type of experience. So I want 2023 to be the best year for everybody here. So I'm going to give you guys as much sauce that I have in my brain to give you guys anything to help you guys. But if you guys can hold off, like watch what's going on. If you guys are still up and you're watching it, watch. But 10:30, go and back test. Look at 10:30 in the last couple weeks compared to Wall Street, and just look for yourself. And you'll start to see, like backtesting tells you a lot. You can go back. I used to do that all the time. And I started to see, why am I not trading at 10:30? What am I stressing out at 9:30 for? Just watch 10:30. All of this was a mess. Like you couldn't even trade this. It was all spin tops. And then finally, when it broke down nicely. Yeah, Tony, that's a lot of pips you could have caught from 10:30. And then what you do is, because look, it lost this demand zone. Once you lost this area, that's it. It's go time. You lost that structure right there. Flush down. I have a black chart. Where's my next area? Look over here. Okay, right over here. So you see this? That would be your next location right here. Okay, there would be a green box. Bring it all the way across. So that's another zone. Let's keep it going. Where else do we have? I just look for pivots where it came down and spiked back up. So a pivot like that. And then if I have more back data behind me, I bring it across. And sometimes you're going to see that these are like equal zones. They're equally spaced apart perfectly. And you can start to see where these equal zones are. It's not that complicated. Some traders don't even do a full top-down analysis. They just do this. This is called just fast screening. Just coming in, you want to scalp real quick. Look at it. And then you see the first pullback right into that red box right there. Okay. So you can see how it's all designed, guys. It's not, we need to make trading easy, guys. We don't need to complicate this stuff. See, and then now when volume closes below, look at the retest. It closes below. if you miss it, don't worry. There's probably going to be an opportunity where it comes back up, gets rejected. Now you know it's confirmed. Sell, stop loss above here, run it down. See this candle? It came all the way down right into this zone and then spiked back up. Okay. Some of us, when it comes down to a zone, we're already taking our profit out of the market because it could have came here, equal low, bounce here and come all the way back up. So a move like this, you shouldn't be playing around. A move like that is 80 pips. You should be at least taking some profit out of the market. That's your daily goal right there. And then if you're continuing to trade, now the market is breaking down bearish. Don't buy the market, okay? Locate the highs and look for equal highs or new higher highs, okay? Locate the highs and then it pushes down to the next zone. And then you see how we start to barcode in the zone and then we break it, green candle, retest it, bearish engulfing candle, and then it continues to run down. We come up, rejection, run it down, back into that zone that I looked. And then there's the bounce. You got some tweezer bottom candles, bring it right back up. We trade in here. And then again, end of the day, there's the flush. So should be trading all day today, selling the market like it was a flush. Don't be getting caught in pullbacks unless you're getting in just real quick for a little bit of a bounce, because you got to know you're coming into upper supply. The algos are working offers all day today. Sonia, you made so much money with PK today. Amazing. Like there it is. That's the setup. I know PK was looking at that. And I'm so happy that you guys nailed it. Like that's excellent. It doesn't get any more technical than that. But what I'm trying to say is from 9:30 to 10:30, guys, there's going to be an opportunity. Just maybe psychologically think about that. Sometimes sleeping in, sometimes if you sleep in and you wake up at 10, you might have the best trading day of your life. You avoid all of this garbage and then you get the beautiful move right there. Just knowing what time candlesticks make there. But I'm not always going to say, don't just sit back and not trade Wall Street, because a lot of times and Wall Street has beautiful setups too. Like right here where it opens, if we closed above here, retested, we could have had a beautiful bullish break just like this. But today, they decided that they needed to accumulate. Why? Because think about it. 1 hour of accumulation at the biggest open of the market, they accumulated trillions of dollars of volume, and look at how they flush. This is the Dow Jones, guys. This is not a Mickey Mouse index. This is the US stock market. And when they flushed it down from 10:30, after all of that accumulation, when we broke down, let's say it also broke around 10 o'clock right here. How far down did we come down to? 600-700 pips. You know how long it's been since we've dropped 600-800 pips? In a day? It's awesome. And for scalp wise, you can look for 30-50 pips a day, no problem. And then if it's consolidating, don't get caught trading this, trap it. And then you understand that there's going to be a move above or below. Now use your equal high, equal low wicks, everything to help you out. Okay, guys. But yeah, I gotta go now. Okay, I gotta go pick up my kids. But hopefully now, look now, if you never really paid attention to it, look for candles with equal highs at maybe areas of supply on a higher time frame or hourly resistance. Look on the opposite side for equal low wicks or bodies of candles at, it doesn't have to always be at a demand zone, but it could just be in a pullback of market. Maybe locate that and then watch if a next candle comes down equal, and then see, maybe it's going to bounce. And instead of maybe taking the sell, maybe you take a buy. Okay. So guys, did this webinar help you guys out understanding? And tweezer tops are just the fancy names. Okay. I don't make up the names of these candlesticks. They've been around for thousands of years. That's what they're called. But just understand, okay, we got the name, but know back end what it means. Think about the algorithms. Think about the depth of market. Take your trading to the next level. Understand, think like a robot. What is happening? Computer system. If these things you already know are pre-designed and predetermined, when it comes to an equal area, and if it breaks above or below, it's going to change the whole flow of order. That's what trading is. It's just order flow. Okay. If we understand how to trade this order flow, I guarantee you a lot of you guys will change the way that how you look at these markets. Okay. So, guys, thank you guys so much. I love you guys. But maybe just take your time to look at this tomorrow. Maybe even if you have to take 1 hour off of trading, because when you're trading, then you get in a trade and you go and draw down. You have different adrenaline. You got you could be you're not really paying attention. So maybe just take an hour tomorrow and just follow the candles, even on 1 minute. You can check on 1 minute and watch. You're going to start to see 1 minute candles developing. You can really speed up your learning by watching 1 minute candles. Do a nice thorough top-down analysis and watch kind of 1 minute, 3 minute or 5 minute candles and watch how they react and start to learn, because maybe next week this could be an entirely different week of trading for you by implementing this in now. Remember, trading is just getting one piece of the puzzle, putting it together and taking one puzzle piece, another puzzle piece, and then at the end of the day, it's all going to come together and make sense. But just everybody, we're at different levels learning wise. So I don't know everyone's levels here, but we take it slow here. We carry everybody as if today's your first day or you've been here for 50 years trading. It doesn't matter. We all take our time here. And yeah, that's Miss Pre. That's what trading is. Just putting the puzzle pieces together. And once you understand that, then you know then when things are happening live, everything clicks in, and you can make fast decisions and smart decisions. And when you're trading, guys, you guys know my rules. Just don't over leverage, especially if you're learning. Okay, you're just going to destroy your learning process. If you're over leveraging and you're trying to get rich quick when you don't even know what you're doing, I'm telling you right now, guys, I'll save you money. You're going to lose your money. You're going to blow up prop firms. You're going to possibly blow up all the money that you're putting in the markets yourself. So let's do this smart this year, guys. Let's everybody here to be profitable. Just take your time with these candlesticks. And another thing too, psychology. If there's a move and you locate equal highs and you're waiting and then it does break out and you miss it, you got to tell yourself this. Who cares? Okay. You might miss one move. There's going to be 1,000 moves in the rest of the day. Okay. This is what I find a lot of traders who are new, they get too carried up and they get too caught up if they miss a trade. And then 5 minutes, 10 minutes later, it presents them an amazing trade. And I'm like, why didn't you jump in there? And they're like, I was still thinking about where I got stopped out. I'm like, but you just had the perfect setup 10 minutes later. You could have got right back hopped in the market and picked up your liquidity that you lost and continued to go. That's what I look at trading too. When I get stopped out, I lose a little bit of my liquidity. But I know, just like a market maker, I'm going to come back at another point and I'm going to get my liquidity. That's the type of mindset I have. I get stopped out just like you guys. So I don't look at it as like I lost money. I lost liquidity. Okay. So I trade within my risk management. So I just drop some liquidity. I'm not over leveraging. So I know at some point in time, I'm going to come back like a market maker and I'm going to pick up my liquidity. And then hopefully I can get it back in the flow of the order flow of the market and start making some profits. So guys, don't take it like a loss if you get stopped out. Just review what happened. Maybe you got bid on an impulse, and guys, you have to trade with stop losses. Okay, I know some of you guys are still in this SST, and you guys are trading with absolutely no hard stop and no mental stop, and you guys are holding a scalp that's turning into a 2-day hold. Guys, that's got to stop. Okay, you got to cut that shit out. I'm telling you, when you're scalping, you got to know, you have a different mindset. A scalp cannot turn into a swing trade where you're holding a loss for 2 days. If it doesn't go your way, if you're down US 30 and your stop loss is 20, 25 pips and you get stopped out, that's it. You're stopped out. Don't let that buy. What happens if you're bought this green candle right here? And right there, you're down 50 pips. You never took your stop loss. Now it goes down to the next zone. Now you're down 100, 150 pips. You're still holding this and you're buying this green candle now. And then what does the market do? It moves away from you. And before you know it, you're getting a margin call. Your account is blown up. And if you don't take any stops out of the market, you're down 600, 700 pips and your whole account is gone. So you have to trade smart, guys. Okay. This is your money. Some of you guys are not trading with prop firms. Some of you guys are trading with real money you guys work hard for at your jobs. Don't fool around, okay? Take the market serious because they don't care about you. If you lose all your money tonight, they don't give a shit about you. There's nobody to cry to when you lose your money. So be smart, guys. Let's start getting money from these markets for all of us here, okay? So it all starts with understanding equal highs and equal lows. This will help you with price action trading, okay? Guys, I gotta go get my daughter at her birthday party. Thank you guys so much. I hope you guys enjoy this webinar. We'll post it up. I'll get it up on Vimeo, and then the admins, they post it up on the websites. We'll get it up there if you missed it, with every other webinars that we do. Tomorrow's Thursday, guys. I'll be back for London. Then we have Dave doing New York. PK will be doing Asian session tomorrow. He did it last night too. It was awesome. So Thursday Asian session, and then I'm coming in for Thursday. We're going to do Fibonacci. Okay. I hope you guys enjoyed that workshop with the intro to Fibonacci and retracements. And now we're going to put it into a live environment, and we're going to trade with it tomorrow. So and we'll be looking for equal highs and equal lows now. Okay. And when I spot them, I'll be telling you guys I see it, and hopefully maybe you guys can tell me too. Tell me, Ron, I saw tweezer bottoms, and we can all work and trade together, and we learn and earn together, guys. Okay. Awesome. Share, your Zoom is working properly. Perfect. That's all good. Thank you. Okay, guys, enjoy your evening. Thank you guys for joining. I hope this webinar kicks in and you guys understand the importance of equal highs, equal lows, and how they impact the order flow of the book. Okay, more importantly, if you want to take your trading to the next level and you really understand how it affects order flow and algorithms and things like that, once you understand these concepts, you can take your trading to the next level. Okay, Franco, no worry, my brother. Paisano, I hope everything is good. Everybody, thank you, Trevor. Everybody, awesome, Barney. Good question, Barney. The way how awesome. And guys, remember that they can be also bullish and bearish engulfing candles, opening up at like equal areas too. I just wanted to specifically talk about the wicks today, but you could also see a situation where you got a bullish and bearish bar opening exactly. It looks like they're both ignited, and those are also called tweezer bottoms and tops. Okay. Okay, guys, have a good evening, everybody, and we will see you guys in a little bit for Live London. So enjoy your evening, everybody. Thanks for joining. Have a great day. God bless everyone.